Well, in terms of stocks going down from this group and the idea of where are the buyers, and Jim made the comment earlier that there are no buyers left for NVIDIA at this level. That's going to be hotly debated, of course, because as the stock was down, buyers are somewhere, right? Buyers are somewhere because they came into that name. Stephanie Link looks at Apple being the biggest disappointment of the mega caps year to date, which is down 3%. It's lost $86 billion in market cap. It's nothing. Obviously, and you bought the dip in Apple. This is a new buy the dip for you.
Yeah, absolutely. And I used some of the proceeds from the semi-cap equipment and semiconductor space, the two names I just sold, to add to Apple. It's about half of the weighting right now in terms of my benchmark, so it's about 350 basis points. The stock's down 7% from its highs. I thought the quarter was just fine. We talked about the quarter, them growing 16% in earnings and 26% in free cash flow. And this is a free cash flow story for sure. They have $173 billion of cash. And by the way, I do think typically this company does announce a new buyback program in the April quarter. So I think we're going to get that. And I think it's going to be another $90 billion. They certainly have plenty of cash to buy their stock. It's about 3% of the shares outstanding. And the valuation, it's not absolutely cheap at 28 times, but relative to its 10-year historical average at 36 times, I think I am getting a bargain for a company that has a great franchise. We all know the story. We know that iPhones and the iPhone 15 was not great. But if you throw in AI into iPhone 16, can you imagine what that is going to do for the upgrade cycle? And I don't think that that's what people are talking about. They have a big meeting in June, WWDC, and where I think they're going to announce their AI initiative. And I think that's going to get people all jazzed up. And what I was really most impressed by in last quarter is the services growth continues to grow double digits, and they're guiding for double digits. I thought those numbers would come down to single digits, and we're just not seeing it, Scott. So I like the story. I like the relative valuation.
Maybe you're buying a little bit of what another committee member is selling because we do have somebody who's taking profits in some of the biggest names in this market. Bill Baruch joins us now via Skype to talk about this. So you've trimmed, thank you for coming on today, by the way. You've trimmed Apple, as I mentioned. You trimmed Amazon. That's an interesting one, too. Synopsys and Adobe. Talk to me.
Yeah, starting with Apple, listen, it's still a large position. All of these are still really in our top five. And this is prudent portfolio management. Apple struggled to get out above 190 from a technical basis. And so I want to step back a little bit here ahead of CPI and just take, a more of a prudent path. Looking at Amazon, great response to earnings. The stock performed very well. It is still our number one holding. We trimmed both of these by about 10%. Just, again, a little prudent portfolio management. But going down the line here to Synopsys, Cadence Design Systems reported after the bell yesterday, and they both are leaders in electronic design automation. So we're just taking a little bit of a cautious approach. Last time Cadence announced earnings in October, they didn't really perform very well after that, though they responded and traded better. We're just kind of seeing that today. Their guidance was soft, and Synopsys is down in sympathy to that. Looking down the road, Adobe, still a big position of ours. They don't report until the middle of March. But I still love the name, and I think there's about $1 billion in revenue from the creative cloud, AI, the AI generative cloud that they have that could still be coming in there that's not counted. I still love the name, but just trimming things here a little bit.
You're not making any sort of, I know you call it, quote unquote, prudent portfolio management, where others might say you're making a broader statement about, queasiness, if you will, with what some of these stocks have done. You had trimmed some of the other mega caps in the past, and now you're moving on to the Amazons and the Apples of the world, too. Am I wrong when someone like Jonathan Krinsky is talking about conviction on the downside remains super high momentum areas, such as semi-software and mega tech in general?
And that's a really good point. And so I think that you can't manage a portfolio all at once. And I think we've had a really great move. It's nice to monetize it. But when we look to NVIDIA's earnings, February 21st, I believe it is, there is some seasonality that aligns with some weakness in the market in the back half of February. Now, I think everything is really being priced in here, right now. NVIDIA, I fear that when we go into earnings, we could see the market sort of level out for a bit and consolidate. Maybe that's already started here after today's CPI report. So that's really what I'm preparing for, is sort of a leveling out trade that could last over the next couple of months, raising a bit of cash to give me some look for opportunities down the road, look for things that may have sold off already. talked about Tesla last week. So I'm still out there looking for things to put this money in cash to.
I'm glad you remind us of the Tesla ad too as well. Thanks for coming on, Bill Baruch. I appreciate you joining us.